We're starting off with financial markets. What is the financial market? The financial market is a place or space where buying and selling of financial assets and securities trading occurs. It is pivotal to the smooth operation of capitalist economies. For whenever financial market fails, economic disruption, including recession and rising unemployment, can occur. If the economy is dwindling, it's going to affect tremendously the government. It's going to affect tremendously the citizens and the country itself. So financial market is very, very vital. It's very, very important for the operation and the success and the improvement of a particular country's economy. So when you hear, if you remember, I don't know if you know, there's this the 2008 depression when the Lehman Brothers that was holding a lot of people's money went bankrupt. It affected the economy. Take, for instance, this recent one, 2020, COVID. When COVID happened, we're no longer working. It was tremendous. The country knows that it cannot keep on operating like that because citizens, if possible, they are going to be dying because there's no place for them to do an exchange where there's a buying and there's a selling, and they can be able to get something and someone, if I have something that you have, I can be able to get it from you and give you something that you need. So this exchange, as it has historical roots. It has started since even before Christ, where in the likes of when our forefathers, they feel like, okay, I don't have palm oil, but I have a lot of yam. I know a particular person, let me use so in your country, Cameroon. So there's a particular person that has a lot of palm oil, but because I don't have palm oil, but I have a lot of yam, let me go and do an exchange. Let me go give this person some yam, and I'll get some palm oil. Do you understand what I'm saying? So there's an exchange. Now, in the financial markets, the exchange that happens with assets, which brings me to the kinds of financial markets. The types of financial market that we have the forex market, that's the foreign exchange market, or the currency market. For instance, you're in Australia, then you went to Paris. Now, when you go to Paris, they don't so when you go to shop for in some stores, or you go to some restaurants, they will say to you, oh, they don't accept dollars. They accept what? Euros. So what do? You have to now go to where you can exchange your dollar for euro, right? What I'm trying to say here is there's an exchange. That is what foreign exchange, because that's literally what forex stands for. I feel like people keep calling it forex, but they don't even understand what the word stands for. It is actually called foreign exchange, whereby there's an exchange of currency between different countries. Now, the stock market is also another kind of financial market. But this particular one, currency is not being traded. What is being traded there is you are being a shareholder in a particular company. Take, for instance, we're using Zoom. Zoom is publicly traded. Mind you, that company that that company that you want to have a share, you want to be a shareholder, they have to be publicly traded. If they're not publicly traded, you cannot be an investor. So, for instance, we're using Zoom. Zoom is publicly traded. Now, if you want to invest in Zoom, you look for a stockbroker and you search for their ticker symbol. You click the amount you want to buy and you become a shareholder. Stock market is you investing in a company, is you choosing to want to trade, is you choosing to want to invest long term in a particular company that you feel confident. Now, that is what the stock market is. The difference between the foreign exchange market is you exchange currencies. Then stock market is you are choosing to be a shareholder in a particular company that is publicly traded. Now, the bond market. The bond market is, in the financial term, it can also be called a debt instrument. It's a situation whereby for instance, the government in Australia, they choose to want to, they need funding. They need money to do a particular project. Now, what do? They issue out bonds. We're looking for investors, whether big or small. There are some bonds that you have to have a certain amount of money, ranging from like 50 million upwards. There are some bonds that can go as less as $5. Now, the bond market can also be government and also corporates. Corporates in the sense, a particular company can decide that, okay, see, we need funding. We want to actually borrow money. When you borrow us money, we're going to give you 17% on return on your investment. Now, when it comes to governments, the same thing, the same situation is also applicable as well. But it's just that some people find trust in investing with the government as opposed to the company because they know that the government will still stay, the government will not run away with their money, the government will not go bankrupt. As opposed to the company that they feel like, okay, the company can go bankrupt or something can happen to the company and I will lose my money. Now, the cryptocurrency market. Cryptocurrency market is a digital currency. Unlike the foreign exchange market that you're actually exchanging a particular currency that you know that is in existence. The currency for Nigeria is Naira. The currency for Australia is Aussie dollar. The currency for UK is pound. Now, you know that a particular country has a currency. There's a form of confidence that, okay, we know that this currency is what is also pulling into pushing this country. This country cannot do without this currency. But cryptocurrency is the fact that it is a digital currency. You can actually see it. You can actually see it. Currency is actually mined. So it is a currency that is digital that can only be bought, sold, or exchanged digitally. It cannot be exchanged physically. Now, commodities. Commodities are the likes of the gold, silver, or oil, or metal, or platinum. They are commodities. Now that the US is experiencing is experiencing a shutdown, investors are now moving towards gold, towards silver. Yesterday, I just saw a report that for the first time, silver is experiencing an all-time high. Investors are now pushing towards commodities because they feel like if the US is experiencing shutdown, their currency is weakening. Investors prefer to go into an investment, go into a market, that's the commodity market, where they know that, okay, yes, come rain, come shine, nothing is going to happen to gold because gold will forever be a valuable commodity. We've been hearing we've ever since if we came into this world, we're hearing how gold is valuable. We will leave this earth, there will be another generation, and I'm pretty sure they will also be hearing the value of gold. Gold has been in existence for a long, long time, which also brings me to the last one, which is real estate. Gold and real estate are the same thing. They both have been in existence since BC.
Wow.
Yes, they've been in existence since BC. Like there are some countries that in their reserve they have loads of gold. Because I do check every Monday, I check weekly reports on the particular currency that I trade as the likes of pounds and yen. I read yesterday that yen, because I was looking at their investments, because on their website you can see where the government of that particular country is investing their money in. The highest investments that Japan has is in gold. So for them to be very comfortable in gold is to show that even if currency dwindles, gold will always appreciate. That's why it's never advisable to just be, as an investor, it's never advisable to just be focused on one particular place. I always say that when I communicate with my clients. You always want to diversify because you might say, okay, I just want to just be investing in dollars, or I just want to be saving my money in dollars. There will be a time that dollar will depreciate. Your money will lose value. But if you know that you apportion a percentage, a small percentage of your money to investing in dollar, and you also put some of your money in gold and put some of your money in real estate. If dollar is depreciating, your investment in real estate or gold will be covering for that losses. Do you get what I'm saying? Now, I'm not saying that
Yeah.
dollar will not still increase. It will increase. But I'm just trying to say to you that the financial market as a whole, it is not linear. It goes up and down. Now, the functions of financial markets, why financial markets is crucial and beneficial to the government or a country. The financial markets provide liquidity, capital, and participation that are essential for economic growth and stability. Do you get what I'm saying now? Exactly. Even businesses
Yeah.
as well. Businesses, for you to be saying, okay, maybe some people will say, oh, I don't want to trade. Oh, I don't want to invest. I want to run a business. Great, good. But I want you to know that there's an economy there's a principle backing that business. That business is in a capitalist section. That business is in the economic section. The economy will there's in the economy if you study economics, there's this thing called supply and demand. So if you feel like you're running a business, they will if the economy as a whole, if the economical growth of the company is dwindling, your business is also going to be dwindling because your business cannot be growing when overall the country's economy is not growing well. So financial market helps to provide liquidity because when investors come and bring in their money and bring in their money and bring in, like I gave you the scenario of the bond market where investors invest, loan money to governments for a return on investment for a particular percentage. If you after this course, if you study Australia, you will see that there's a government bond. People always rush into it. Like when they release it, people are always very quick to tap it because it doesn't stay long.
Not at all.
Exactly. It doesn't. So if you feel now, if all this money that they are bringing together, they are also helping because when they now bring the money together, they help to facilitate the project the country needs to make external investors to feel comfortable to say, okay, yes, this country is doing well. I can actually invest in this country. Okay, let me come to this country and set up my business. So they all go hand in hand. They're interchangeable. So now let's move to trading versus investing. So I feel like there's a need for me to differentiate this. Trading is like catching daily or weekly opportunities in the market. You're in and out, making profit from price swings. While investing is letting your money work for you over time. It's patience, not speed. So with trading, that's why I see, okay, yes, I know yes, in the trading sphere, there's the swing trader, there's the position trader. Now, the swing trader, when they say swing trader in the trading world, it means you are holding trades for more than one day, or maximum, you're holding trades for a week. When they call you a position trader, it could be that you're holding trades for like a month, for a few weeks, a month, or few months, minimum few months. But if you're an investor, you are investing for the long haul. Long term can be 5 years, 10 years, 20 years. Do you see the difference now? So when someone says I'm a trader, that means you are in the financial market to partake in the profits and even the loss. Because yes, even when the currency is weak and the currency is selling, I can still benefit from it.
Hmm.
But
Wow.
it's just for a short time. That's why I said it's between a day, a few minutes, or weeks or months. But with investing, I look for a particular stock as let me take a cue for my portfolio. I am invested in Nvidia. Now, my investment with Nvidia is going to be 5 to 10 years. I'm not going to be checking at it to see, oh, what is the technical analysis saying? What is the news? Yes, I'll be getting knowledge from the news, but the knowledge I'm going to be getting from the news is either that, okay, the company is about to go bankrupt, then I will just go and liquidate my money. Or the company is weak and the price per share is going down. I want to look for money to buy the dip. They call it buy the dip because I know that eventually the price will come up. And when the price comes up, it's going to be to my own benefits because I know that Nvidia is for the long haul. But I won't execute this mindset to trading. I refer to myself as a disciplined and confident swing trader and investor. And that is the end of today's class. Enjoy the rest of your day. Thank you very much for paying rapid
Thank you.
attention. Cheers.
Okay.
Enjoy the rest of your day. Bye.
Bye.